Hello, everyone. My name is Kenton Cavescu. I'm an ex-BCG consultant, an ex-Googler, and the founder of Rocketblocks, an online platform that helps candidates prepare for interviews. In today's Rocketblocks mock interview, we've got two of our experts sitting down and walking through a very cool case about evaluating an investment opportunity in the transportation space. The interviewer is played by Misha Arora, who is an ex-L.E.K consultant and a graduate of the London Business School, and the candidate is played by Daniela, who is a graduate of Columbia Business School, a former McKinsey intern, and currently works at Google in their strategy and BizOps group. So let's go ahead and dive in.
Hi, Danny. How are you doing?
Hello, Misha. How are you? Pleasure to meet you.
Are you ready for your first round interview with Rocketblocks?
Yes, super excited. Let's start it.
Okay, perfect. Okay, so here we go. So your client is a diversified investment management firm.
Okay.
You've been engaged by a small group within the firm that pursues like early stage and hybrid investments. The firm is currently considering a 30 million investment in a crowdsourced helicopter service in the New York City metro. This service would allow members to use an app or a web portal to propose trips from specific destinations at specific times and find other unrelated passengers interested in sharing the trip. By splitting the helicopter amongst as many as 4 to 6 passengers, depending on the model, users are able to dramatically reduce the cost of a private helicopter charter. So you are basically brought in to like make sure that this 30 million investment has a good return on investment.
Perfect. Thank you for sharing the prompt. So just to summarize here, our client is a diversified investment management firm, and they want to invest $30 million in a crowdsourced helicopter business in the New York City metro area, and they hired us to see if this is a good return on investment for them.
Correct. That's correct.
Perfect. Just to understand more how the client operates, I have a couple of questions.
Yeah.
You mentioned that the business model is either web or an app.
Yeah.
Their main geographic focus is New York City metro area, or they're planning to broaden their focus?
So right now it's only New York. They've actually got a couple of service segments, but maybe like in the as one of the solutions, it could be one of the options that they might want to expand. But right now they're only focused on New York.
Perfect. And you also mentioned that they are in a couple of service segments.
Yeah.
Which would be those service segments, and how much they would represent each of them?
All right, good question. So they've got the two service segments. So the first one is the Manhattan to airport service, and the second one is the vacation market service. The Manhattan to airport service, they basically pick up passengers from one of like 3 heliports, on the Hudson River, and they fly to all the New York airports. And this segment represents 40%, as you asked. And the other segment, which represents 60%, is basically like a tourism-focused service, in which you would travel between New York and like a beach vacation, like a Hampstead or something. Like these are more seasonal, but because the trips are longer, it's 60% of the revenue.
Okay, perfect. It's interesting that actually the airport service represents 40% of their business and vacation 60%. Because when you think about Uber or those type of service, airport is usually higher.
Yeah.
But I think in terms of my questions, those were the things are very clear here to me. Let me get just 1 second for me to understand what we needed to look in order to see if this is a good return on investment.
Yeah.
Okay, so in order for us to understand what would be the return on investments for this business for a client, I would look to 3 things.
Okay.
I would start first with the market, second with the unit economics of this business, and third, potential risks that might have.
Okay.
In terms of the market, I would look to 3 things inside the market. First, how large is the airport and the vacation market in New York City?
Okay.
What is the growth rate for us to understand the size of this opportunity? Second, I would look to understand what is the expansion opportunities that we have, like geographically. So if we want to expand to other regions, what would be the size of those opportunities? And third, I would look to customers' preference to understand how much conversion rate we would have in each of those areas that we wanted to expand.
Okay, understood.
In terms of the economics, I would also look to three things here. I think first, the unit economics of those business. And by unit economics, I refer to revenue, the variable cost, and the fixed cost. Probably our fixed cost would be the most significant ones to understand if we can actually pay for this operation, if the business would be profitable. Second, I would look to the CapEx required. So we had two options here probably. Either we buy the helicopters or we use a leasing with helicopter companies. So we would need to understand what would be our initial CapEx to invest in this business, and also the company's capital position to see if we actually have the investment. And the third thing that I would look at in terms of the economics is the return on investment. So what is the return on investments on this business right now? And I also would look to the return on the new investments to see if looking forward, this is a business that would make sense, because probably each geography is a bit different and in terms of return on investment. The third thing that I would look in terms of risks is first safety. So we would need to account for potential liabilities. So if the helicopter falls, people dying, so we would need to take into account this. And second, I would look to regulation. Probably there is a lot of regulation in the space, and governments probably control the amount of helicopters that can fly. So this might be something that limits our demand. So I would take a look on that to understand if there is any impact on our opportunity sizing.
Okay, that sounds very good. I think you've covered a pretty big sort of section of the of the key points that we were meant to discuss. So maybe let's go on to the first part of your structure, which was the market. And I think that to begin with, it might be useful for us to determine, as you said, that there must be a couple of things. You can look at the market that they're in right now and the market that they want to potentially get in. But the market that they're in right now, let's try and size what that market looks like. And then I have some information. I've got some, I'm happy to provide you any sort of help with assumptions and stuff. But let's size the market that they're currently in right now.
Perfect. So market sizing right now, just to summarize, would be mainly focused on the Manhattan airport and also the vacations in New York City metro area.
Yes, both of them. Yes.
Let me take a minute just for me to structure what I would look, and then I share with you.
Sure.
So for understanding the market sizing, I would look to each of the segments differently. So okay. Starting from the airport, the Manhattan airport service. Basically, the revenue of this market would be number of passengers that would be flying times the average ticket for those passengers.
Yeah.
For defining how many passengers, I would look to a couple of things. I would look to probably, because we were talking about the airport, I would segment these into type of customers. One would be leisure, people that are traveling for visiting New York, and the other one would be business. So on the leisure piece, I would try to understand from the total of people that goes to the Manhattan airport, to the JFK airport or the 4 airports that have in New York, how many of them are here actually for visiting, and how many of those people actually have the income to come and visit, to do this type of service. So probably just class A or class B. And how many of them actually would like to want this service in order for us to estimate. Okay. On the business side, I would look to how many people go to Manhattan in terms of transportation. What would be the percentage of those people that would actually be business, that would be traveling for business? What would be the percentage of those business people that actually can afford? So probably C-levels, high executives. And how many of them actually want to do this service? Because probably only the ones that have a busy schedule or a busy agenda.
Yeah. Okay.
So in order for us to start here, I can estimate, or if you have any information about the amount of passengers or what would be the price for ticket, it would be great to start.
Yeah, so for the airport visits, the price each way is $200.
Okay, perfect.
And in terms of I think to give you a start on basically the number of passengers, I can give you some information, which is that the New York the area airports experience 130 million visits per year.
Perfect. So I'm going to leave aside the price for tickets just to use the 130 million visits to find the amount of passengers that would be.
Sure.
So if we know that there is 130 million visits, from this, we can divide how many people would be for business and how many people would be for leisure.
Yep.
I know that probably in terms of the amount of people that want to go for business and leisure would be around 50-50. So 50% for business, 50% for leisure. So probably 65 million people on each of those. For the leisure segment, I would assume that probably 70% of people that goes to Manhattan comes for leisure. Not a lot of people comes for business. So 75% from 65 million would be around 46 million passengers that would be of those visits. 40 million visits would be for leisure.
Okay.
I would assume that around 20% of those 46 million actually has the condition, it's class A or high income people.
Okay.
So then we're going to have 9 million. And from those 9 million, I would assume that a very low percentage of them actually want this service because it's a very expensive service. So around 5%, I would assume. So we are talking about 450,000 people that would actually like to come to use the service and from the leisure segment.
So sorry, this is you're saying 5% of 9 million are the ones that will actually want to use this service?
Yes.
Okay.
So going for the business segment, I know that I have 65 million people that actually come to the business or to Manhattan.
Yep.
From those 65, I know that I put it 70 for leisure, so probably 30 would be the rest, the remaining. So we are talking about 19 million people on the business segment, passengers on the business segment.
Okay.
And we're going to use the same 20% that I used for the high income, for the high C-level executives that actually could afford this service.
Okay. Do you think that in the case of business, maybe in terms of affordability, this could be higher?
It could actually be higher. We could say 30 or something like that.
Yeah, for the fact that maybe because these trips are being expensed by the company, so potentially it could be higher. But I think for the sake of argument, let's take 20%. Let's continue with that. I think that's a decent.
Yeah, but I agree with your point. That would increase their willingness to pay and probably would increase the price or the demand for it. So if going over the 20%, I'm talking about 20% of 90 million. It's around 4 million. And people that would actually want to use the service, I know that I used 5 for the leisure, but I think that for executives, I would use a higher number because probably they want to save time. When you're on a vacation, you don't want to save time that much. So I would use 10%.
Okay, fair enough.
So 10% of 4 million would be around 400K.
All right.
400,000 passengers. So I know that I had 450,000 for leisure, 400 for business.
Yep.
So we are talking about 850,000 passengers that would trips that would have. You told me that the price would be around $200, the average price.
Correct.
So multiplying those to get the market size, we would be talking about 170 million only for the airport, which seems sizable, but for a $30 million investment, I don't know if it's would be still an opportunity. So let's go for the biggest market, that is the vacation market, that you told me that is 60% of the revenue.
Correct. Yes.
Amazing. So I think for looking for the vacation market, I would look to the amount of trips times the price of those trips.
Yeah.
And for looking for the amount of trips, I would try to calculate this by understanding how many people we have in New York, what is the best percentage of people that actually can afford the service,
Okay.
what is the percentage of people that would be like going for vacation,
Okay.
and what would be the percentage of like the top markets around the New York City, so across all the airports,
Okay.
and what would be the percentage of people that actually want this service. I don't know if you have any information about the amount of people in New York and the average price of those trips.
Yeah, so I've got these. So the typical New York population, I think, in the last couple of years has been about 8 million people. And the price of this trip to a vacation market, because it's a much longer trip than the airport service, it's between $500 and $1,200. So it's significantly higher than your airport trip. And then also, like, the company right now serves the top 5 vacation markets out of New York.
Amazing. So with that, I'm gonna start to estimate here first the amount of trips, and then I multiply by the average price of those trips to understand what would be our revenue in this market.
Okay, sounds good.
So 8 million New Yorks, people that can afford. I'm gonna continue with the 20% of class A and B. So we are talking about 1.6 million people. People that usually, the percentage of those people that actually go for vacations, I would say that it's higher because they're high income people. So around 90% of those people usually go for vacation. So from 90% of 1.6, it's 1.4 million.
Okay.
And how much of those top 5 markets would represent from this total amount of people? I would say that probably around 50%, because probably the top 5 markets are very concentrated on that demand.
Yeah.
So 50% of 1.4, it will be around 1.7 million people. And for those that would actually would like to use the service, I would say that probably a high percentage here, like around 25% of the 0.7 million, which would give us 180,000 people around across.
Just to recap, so you had 1.4 million people, and then the top 5 vacation markets was 50%, so that's 0.7, and then you've taken 25% of that, who are the ones that can actually who want to use this service.
Yeah, that would be actually our conversion rate. So from the 0.72, how many of those people we actually bring because they are willing to pay and they want that. So
I have to put like 25% seems a pretty optimistic sort of number. What's your reasoning for picking a high number like that?
Yeah, I think that probably because on vacations, like I think that when I think for the vacations, I'm thinking about people that are going to the Hamptons or to the areas around. And because New York has a lot of traffic, probably the demand for this service, the conversion would be like better, because instead of getting a 4 hours drive to the Hamptons, you can get a 10 minutes. So we are actually saving more time, I would say. Yeah,
and as I think we discussed, that this was the top 5 vacation markets. So like these are probably wealthy people who are basically traveling. So you're right, like they would probably want to use this service. So that's correct. Okay.
Yeah, you're saving more time, so that would make more sense, because a airport trip it's 40 minutes.
Yeah, correct.
Perfect. So with that, we have 180,000 people. For us to multiply for the price for each of the trips, I would imagine these prices for one way, and we would need to account for the way back, probably.
Yeah.
So I would multiply that by 2 trips to make sure that I'm accounting for the way back also.
Yep.
So 2 times 180, 360,000 trips. We would have as a potential opportunity. Multiplying by the average price of the trips, you told me that it's around 500 to 100 and to 1,200. So
Yeah.
we are talking about an average price of the trip of $850 per trip.
Correct.
Times the 360,000 trips, we are having a market around 300 million. So our total market would be 300 million plus the 170 million for the
300 million because you multiplied 360,000 into 850.
yes. It will be around 306 million basically.
You're very fast at maths. Well done.
Yeah. And adding all those things up, 170 plus 306, we are talking about 476 million as a total addressable market. It seems to be a good opportunity in my perspective. Of course, for me to be very certain on that, I would need to compare that with other opportunities that the firm has, and also other geographies to understand if there is something that is more attractive. And also, we are talking about the firm would need to invest a minimum of like 10% of this addressable market. That would be 30 million. So if I was this client, I would try to look to expansions opportunity here.
Yeah, exactly. So I think that's a very good segue into the next section. So like as you mentioned that it's a pretty decent market size, but given our current penetration, like how much we've already like sort of taken of this market, because we are one of the only players doing this, there might not be enough headway if it's just this market, right? So like if we were to consider like some other opportunities within the New York area, how would you assess them? Like, just can you think of a few opportunities that might be quite relevant given our current asset base and how we can use that better?
Yeah. In terms of thinking about new opportunities, I would think about maybe expanding the current portfolio. And second, I would think about expanding the customer segments. These 2 things that I would think about. So in terms of current service, I would think about maybe we could do lunch private rides. Maybe we could offer like food or experience with like VIP rooms, this type of stuff that we could charge more to have other different revenue streamline. We also could do partnership with credit card companies like Amex or MasterCard to have a better experience for the customers, and charge them for providing this benefit for their customers. And we also could think about opportunities to work with dynamic price. So like an Uber. So if we have high demand, we are charging more. If we have low demand, we are charging less. The second option of expanding customer segments, we could think about going to the business segment. So instead of charging C-levels, maybe try to do package with big corporations, so we can actually lock the year revenue with them. Another thing that we could do is tourism service. A lot of people want to have like helicopters to see around New York City area, Manhattan. So we could also try to go for these customer segments. Those are a couple of the things that I would think about inside of the New York area.
Okay, that's it. I mean, I do really like the last 2, like where you lock in the revenue for the entire year, and then also like how you could basically use them for like tourism and stuff, because there's a lot of people interested in like helicopter trips, right? So I think that's very very interesting. Okay, I think so. As good as these opportunities sound within the New York area, I think that it could be the right time for us to also look at potential other cities as well where it could expand. So like because we've got like lower capex sort of in New York, maybe we can invest in more capex and expand into other places. So I've actually got some information for you in terms of like demographics and geographical data of other, key states. And it'll be good to get your view on like sort of what you think about, potential expansion opportunities outside New York, right? So let me share this with you. I'm going to try and share my screen, and let me know if this works.
Perfect.
Are you able to see my screen?
Yes, it's loading here. Perfect.
Okay.
Now I can see your screen. So this is a chart about potential new market demographic and geographic data. On the circles, we have the total population, and we are comparing here the percentage of householders with more than 100K in income versus the number of public airports.
Correct.
So the first thing that I see here is that definitely New York is the best opportunity because we have the most amount of airports, and we also have a relevant number of the population that has more than 100K, that is 35%, and we also have a significant demographic. So probably after New York, the other markets, I would assume, would be smaller for us. In terms of like
New York is the best market, but if you had to pick another couple of options in terms of like, the expansion opportunities, like which ones would you pick based on the information you see?
Yeah, I would try to prioritize based on the number of public airports and also the cities, the states that actually have the highest income people. So my obvious choice would be either to go to Los Angeles or Washington here, probably. Those would be the next markets that I will look. Los Angeles, because you have a significant amount of airports and you have a significant demographic. Washington, because you have a lot of high-income householders. So that would mean that our segment, that is the vacation segment, probably, that is 60% of our current revenue, could be higher in Washington. So that would be the next markets that I would look for.
Okay. And apart from like this information, is there anything else that might influence your decision, like one way or the other, in terms of like which city you want to pick, apart from like just number of airports and the income of the households? Because you did mention like, that point about New York.
Yes, I would try to understand more the amount of trips and the amount of people that would be willing to actually do that. Because when I see Washington is kind of a small city. So when we look to people that want to go to the airport, probably not a lot of people. But Los Angeles, it's very similar to New York. So you have a lot of airports, a lot of traffic. So the amount of trips might be higher. So I would try to estimate the amount of trips on each of those places.
Yeah, I think you mentioned the point that I was looking for, which is traffic. Like, sometimes like the congestion on the roads between cities is so much that people actually might prefer to like just take a helicopter trip, if they're getting late or something. So I think you're right. Like, I think both Washington and Los Angeles do face like pretty severe congestion problems. So I think they both potentially could be good opportunities to expand into. Fair enough. I think Daniel, let's move on to. I'm going to stop sharing. But I think that we've looked at a lot of information. We've seen market sizing. We've got like some idea of like the expansion opportunities. So I think it's probably now time to like sort of synthesize your findings and let me know what you feel overall about the opportunity.
Yes, just give me 1 second for me to structure here, and then I share with you.
Sure.
Perfect. So in terms of my recommendation for a client, I think that seems to be a very good opportunity. So the client should invest on this crowdsourced helicopter business because when we look to the market size in the New York City metropolitan area, seems to be a very significant opportunity, which is for around $476 million market that we could actually leverage. Second, we looked to expansions and geographic possibilities, and we saw that LA and Boston might be good geographics for us to expand. So we would actually grow this market size. As next steps here, I would advise the client to first assess some of the potential risks that we looked. So mainly regulation and also safety liabilities. And second, I would also assess our assumptions, especially in the new geographics, trying to understand what will be the amount of trips and also the traffic on those places, if it's high or not, to see if it's a sizable opportunity.
Okay. Well done, Dani. I think you did a great job. I'm very pleased with the interview. Well done.
Thank you so much. Pleasure to meet you.
Hey everyone, it's Kenton Covescu here, the founder of Rocketblocks. Thank you so much for watching this mock interview video. I hope you found it informative and helpful as you are getting ready to prepare for your own interviews and hopefully landing that job offer you are excited about. We have a ton of great content on the Rocketblocks channel coming out on a weekly basis, mock interviews, mini lessons, and chats with our Rocketblocks experts. So if you haven't subscribed yet already, please do so. There is a big red button below. And if you hit that, you'll get all of our content as soon as it comes out. Thanks for watching and have a great day.